The debt bonded slave question begins the first series for the Crises of Modernity channel. This topic is of particular interest to me given my background in economics and finance, which lends me to have more expertise on this specific question. I've been working on economic and financial research in this area for the last year, and it also involves my work in the United Kingdom in particular, which I'll be discussing later on as well. So, what is the debt bonded slave question? And it can be broken down into two components. The first component is the micro debt bonded slave, which can be thought of as a direct component and an indirect component as well. Of course, most individuals today in the modern world and financial system are some sort of financial debt bonded slave in the fact that they carry a debt or several debt products in their personal affairs. So examples would include student loans, medical debt, a mortgage on a home, a car loan, or credit cards. There's also a lot of other variations as well. The other large component to individual debt outside of consumer debt is corporate business debt. In fact, the corporate debt markets are almost always typically larger than the equity stock market in terms of total size and capitalization. I think that is something that a lot of investors in the stock market may not be aware of or may be surprised by. Oftentimes, when it comes to the corporate bond markets, you could argue that they often precede or signal events and changes in the equity stock market. So it's very important when it comes to financial, corporate finance, or just investing in general to understand the corporate debt markets, not just because of their size and scope, but also the fact of how they can directly influence the equity stock markets as well. In addition to direct forms of individual or corporate debt, there is the indirect component of the national and local sovereign debt that each individual taxpayer and citizen in any given country and jurisdiction is at least by extension responsible for. For instance, if you look up the United States national debt clock, you can see how much each taxpayer and citizen is responsible for in terms of the national debt load, for the Federal Reserve, and also the total you can see including state and local debt as well. Now, that's something that I think a lot of people easily forget about, this indirect component, or just don't factor it in given the fact that it is indirect and it's more of a nebulous sort of concept. The second debt bonded slave is the macro debt bonded slave, and this is something that is of particular interest to me and my research, given the fact that it factors in national debt loads research and is a common topic in macroeconomics, researching and understanding how does national debt loads and national debt affect the broader economy. It's important not to forget about local and regional debt, though, as well. Oftentimes, when discussing national debt levels and economics in the media, for instance, there's a tendency just to focus on national numbers, when, depending on the country, the local and regional debt problems can be just as severe or even more severe compared to the national government. It also can be deceptive not to include those numbers in the conversation or to factor them in, given the ultimate responsibility often is going to fall on the national government that will have to step in or intervene in local and regional debt crises. So either way, in the end, it does become a national problem when you have local and regional debt problems. Another component of the macro debt bonded slave question ties in the aggregated consumer and corporate debt from the individual levels. And this is important not just when analyzing trends in economics and finance, but it also poses a form of systematic risk to the broader financial system and economy if those aggregated totals become too high. And this is why oftentimes you might hear discussion about, for instance, in the United States, the level of total credit card debt that aggregated US financial consumers have. Those aggregated numbers are important, not just in terms of a trend, uh, but also what risks they could pose long term to the economy or the health of individual consumers as well. The debt bonded slave question is important not just for today, but it also shows up at some of the most important and critical junctures in global history. It often goes hand in hand as well with the social contract question, which we will further discuss and flush out in the future as well. One of the first examples is Athens in the 6th century and Solon of Athens constitutional reforms. Now, this not only underpins an important moment in Western civilization and history, but also the development of democracy as well. We won't be going into the specifics of Solon's constitutional reforms, but it is important to note the reason that the moment comes about. And specifically in Athens at the time, there was a rise of Athens citizens becoming so indebted in individual debt that they began selling their family members and up to including themselves into actual chattel human slavery. The problem became so large and that it actually facilitated a political and social crisis in the city. At that time, they decided that they had to bring in Solon of Athens, who was, kind of considered a wise man of the city, to implement the necessary reforms to be able to save Athens from this social and political crisis. It's important to note that these moments of political and social reforms often occur only because of the fact that they are first preceded by a financial and debt crisis, whether that's at the individual but also the national level as well. The second example is the succession of the plebs in Rome, specifically the first succession of the plebs. There are multiple. What had occurred with the first secession was that a military veteran who was actually indebted in service to the city with a local war. If I remember correctly, it's the Samnite Wars. But after returning home, of course, during service, not being able to plow the fields and tend to the financial affairs of the local homestead, that military veteran actually became so indebted that they were, essentially forced off the land and became destitute. He goes to the city and many of the local residents and essentially pleads his story. And what ends up happening is that many of the other local citizens see their own plight in his own plight and end up organizing, and it ends up coming to a head with a political and social crisis again with the secession of the plebs, where Rome's city leaders and aristocrats had to, in the end, come to terms and implement a series of reforms that would allow the plebeians to essentially be more taken care of. There was also, for instance, the tribunate, which was implemented, and the veto of the tribune to be able to act as a check and balance against the city aristocrats. But that is also an example in Roman history where we see the debt crisis end up fueling a political and social crisis within the city. The third example with the American Revolution and the Whiskey Rebellion, what arguably may have actually started the American Revolution was a debt crisis in Britain, in terms that they had fought a global war against France in the 7 Years' War to win global empire over France, but the reward being a boatload of debt. To pay down the debt, of course, the British government attempted to implement taxes on those American colonial subjects. They, of course, did not like that, and many other events would occur with an irreconcilable break. Now, after the war, though, there was another debt crisis. Specifically, the Whiskey Rebellion was fueled by military veterans who were indebted again in service with the Continental Army in Pennsylvania. They ended up revolting in terms of that they were under pressure, becoming foreclosed on. There was inflationary pressures, and they were unable to meet their debts. There was also national financial issues in terms that the currency was not as reliable. There was also issues with the Confederation Congress being able to meet the obligations at the national level, being able to control taxation, but also controlling state finances as well. And so it was essentially a hodgepodge of overlapping financial issues that ended up exploding in the Whiskey Rebellion. And it was put down in the sense that it didn't escalate from there, but it did precipitate the Constitutional Convention, which would end up implementing the constitutional government in the United States that would actually address the debt issues at the state and local level, but also the national level as well. And so, again, American history, we can see that financial and debt-related crises would, in the end, form very critical components to American history. The last example, of course, is the French Revolution. Now, in this circumstance, it was actually the Americans who were funded by the French government, the French monarchy, which not necessarily, they weren't lovers of American liberty. They did, however, want to stick a knife in the back of the British and get back at them for the losses of the 7 Years' War. The debt, on the other hand, that the French government would incur by helping out those plucky Americans would, in the end, bankrupt the French state. Now, the problem was that the French nobility had very large tax privileges and concessions where they essentially did not have to pay any taxes. The French monarchy had to keep levying more and more taxes on a smaller and smaller tax base, and the burden fell overwhelmingly onto the poorest and the lowest social classes in France. Now, of course, this would eventually come to a head because Louis XVI was unable. In normal times, he would have been a meh monarch, average, but these were not average times, and he was unable to be proactive in the sense that he would force the French nobility to reduce some of their tax privileges, and the self-correcting mechanism would eventually take place, far more volatile than the French nobility would have probably bargained for in the end. Now, those tax privileges would have, of course, the trade-off and the opportunity cost that for there to be a tax privilege for one person, liberty by its very definition requires a constraint on the other hand. And in the French Revolution's circumstances, the problem was that the tax privileges and tax liberties of the French nobility would in the end place more and more burden on the lower classes, which in the end they could not afford, and it would precipitate a social and political crisis. Now, of course, the French Revolution with the French Terror, one of my favorite figures in history, Edmund Burke, rightly condemned the Terror for its excesses. But Mark Twain, who's a fellow Missouri native, did say about the terror in the French Revolution that there were two reigns of terror. If we would but remember it and consider it, the one wrought murder in hot passion, the other in heartless cold blood. The one lasted mere months, the other had lasted 1,000 years. The one inflicted death upon tens of thousands of persons, the other upon hundreds millions. But our shudders are all for the horrors of the minor terror, the momentary terror, so to speak. Whereas, what is the horror of swift death by the axe compared with lifelong death from hunger, cold, insult, cruelty, and heartbreak? What is swift death by lightning compared with death by slow fire at the stake? A city cemetery could contain the coffins filled by that brief terror, which we have all been so diligently taught to shiver at and mourn over. But all of France could hardly contain the coffins filled by that older and real terror, that unspeakably bitter and awful terror which none of us has been taught to see in its vastness or pity as it deserves. And I would agree with both standpoints that the terror did have its excesses and should be rightfully condemned, as Edmund Burke did. But also, Mark Twain was right that the reason that the terror occurred was because for the vast, overwhelming population of France, they had been terrorized in terms of over-oppressed and overburdened by taxes for so long. And so it's important, I use that quote to emphasize that the debt bonded slave question and the financial systematic risks and burdens that are placed on part of society does impact and has important long-term ramifications on the entirety of society, but also on the development of politics and the social contract question. So these are just a couple examples, but they're some of the most prominent in history, and it's important to showcase that these questions overlap, and that often it is the financial crises and debt crises that precede a political crisis in some form or fashion. And these are just some of the most prominent examples. The history of the commercial revolution and weaponization of debt leverage is important to cover because it really is the birth of not only the modern financial system and modern financial history, but we also see the development of the modern national central banking authority. The commercial revolution was a product of necessity and crisis, nor was its credit won bankers alone. The Dutch Republic, the birth of the Dutch Republic, was critical to the formation of not merely the commercial revolution, but the fact that 80 years of endless war would require the Dutch bankers to get a little creative in terms of funding the sinews of war. And what would end up happening was that the creation of public leveraged debt products would occur that would allow the Dutch government and Dutch commercial banking institutions to raise much larger sums of money and to leverage that money in a way that would allow them to actually fund the long-term necessities of war. The Swedish government would, in the end, actually import some of those ideas, including some Dutch bankers, to expand on the ideas and theories of the early commercial revolution to create the first sovereign central banking system. That in turn would end up recycling back into the Dutch Republic, and in a lot of ways, what is a small flood-prone swampland would end up using that commercial leverage and commercial revolution to fund and create a global empire. And this would end up becoming very important later on with the development of the Bank of England in the United Kingdom, because even though in the end, they would beat the Spanish Habsburgs in terms of the 80 Years' War. They would win independence. The problem was out with the old boss, in with the new boss, because the Bourbon France, especially under Louis XIV, the Sun King, would end up seeking similar ambitions as the Spanish Habsburgs, and the Dutch government would end up having to fund a lot more war, this time not against the Spanish, but against the French. And William of Orange, there would be, of course, a lot of important events beforehand and leading up to, but he would invade the foggy, damp islands in order to help fund his war against Louis XIV. And that would end up creating the foundations of the British financial system and the Bank of England, which is very important because that was my case study in terms of showcasing the development of the macro debt bonded slave, which in this circumstance was the Bank of England in the United Kingdom. So far, when discussing the debt bonded slave question, we have focused on the negative aspects and issues concerning the debt bonded slave question, but is being a debt bonded slave that bad? And when would it be a positive thing? Here we want to focus on first Alexander Hamilton and the development and future of the American financial model and system. Alexander Hamilton was a critical, if not the most important, figure in early economic history for the United States. He was heavily inspired by the British financial system and financial model. He intuited the importance and need for sovereign governments to carry a continual debt load and to facilitate and promote an active debt-based financial market banking system in the private sphere as well. There are multiple reasons why it is beneficial to do so in terms of carrying a continual debt load. The first is the fact that you can build financial credibility. It also allows you to have more borrowing potential in the short term, but also the long term. This is critical if there is an emergency situation, an unexpected event, which always occurs, that would require a borrowing of a vast sum of money in a short period of time. The access of financial credit, but also the carrying of a debt load would allow that to happen in far greater quantities. It also acts as a program to facilitate and support capital, economic development, and activity in the private economy. This would be important to underpinning the formation of the American manufacturing model in the United States, but also long term, we would see, for instance, later on, the development of the National Railroad system and other aspects of American industrialization that would be facilitated by this economic model. It essentially, Alexander Hamilton was arguing that it is in the self-interest of the national government to be a permanent debt bonded institution. You don't want to pay down the debt in its entirety, because in doing so, you are going to invalidate some of these benefits. Now, this also could be argued to be true for an individual and a consumer. Here, the concept of self-capitalization can occur where, assuming no starting capital, a person would need and want to increase their earning and future capital potential. Early in your life, you don't have, of course, a lot of money, but you have the ability to work and earn financial capital through the use of your human capital. But you also want to increase your human capital, which you can do through, for instance, education, which would require potentially taking out student loans, debt, in order to increase your human capital and thus the future financial capital earning potential that you have. Or you could take out a consumer credit loan to finance a capital opportunity such as a business, which again is another form of self-capitalization. So we can see the different aspects of positive aspects of being permanently debt bonded. In the modern financial credit system, especially in the United States, in order to build a credit score, which is beneficial for many reasons, you have to carry a continual debt load or utilize debt products, even if you don't need them. For instance, you may carry a credit card, keep that open, even though you may not need it, because it is available if there were, for instance, an emergency, but also so you can actually build a higher credit score to be able to do future things like purchase a home, which requires much more leverage and credit opportunity and access. So in the end, comparing the negatives and the positives, we can see that the answer is the lawyer's answer. It depends. Is being a debt bonded slave a good thing or a bad thing? And the more important question is, when is too much debt too much? And what is that sort of threshold, and where at the individual level, but also at the national level, where does that point occur when there's too much debt? So that covers positives for why you may want to be a debt bonded slave. Finally, we have caught up to the contemporary times of today and the rise of developed economy debt loads. Since the mid-2000s, especially in the post-2007 financial crisis, there has been a relatively unabated rise in most, not all, developed economies and their debt to GDP thresholds. We will be using the United Kingdom and the Bank of England, shorthand BOE for Bank of England. The old nickname, though, for the Bank of England is the Old Lady of Threadneedle Street. The Bank of England is located on Threadneedle Street. That's also where the London Stock Exchange originally was located, as a financial center and district, as a case study, and unpack the problems and long-term effects of the contemporary rise of developed economy debt loads and the macro debt bonded slave question in future videos. Thank you.